Hi there, it's Professor Liam. We're looking at the podcast for Chapter 3 homework. And Chapter 3 homework has problem 3.3b, which is really only part 1. And then parts 2 through 9 are all problem 3.8. So I'm going to talk about 3.8. It really indicates all the different things going on in the chapter. But I am going to quickly scroll down 3.3b so you could look at this over and over again and see the solution if you care to, and how it compares to what you did. But having done this, I want to turn to 3.8b, where I actually have some commentary for you about what's going on in that chapter, in that problem. Okay, so we're given a basic trial balance, and that's here at the top. And then we're told about all these transactions that happen throughout the year. And we've been asked to do regular entries. And the basic reason, this is probably not super realistic, but the basic reason we give it to you this way is we want you to think about the fact that there were normal entries. And then at the end of the year, we're going to do adjusting entries, some financial statements and trial balances, and later closing entries. And we want you to see how all that works. So again, I'm going to go down and show you the journal entries here, but I'm not really going to talk about them. But you can kind of see from here how this compares to your solution. But what I want to do is focus on these new things. Okay, and so when we go down and we look at part 3, we see an unadjusted trial balance. So this is after we did everything that was in part 2, we would have created this trial balance. And remember, I said in the podcast, a trial balance is nothing more than a list of accounts and their balances. So this thing has to be in balance. Every account that still has a balance is listed, and we have the total balance at the end. Now here are adjustments. And so in this case, we're looking at adjusting entries. We had depreciation of $6,200. They punted. The authors punted on having you calculate depreciation. And instead, they just told you what it was. Well, that's fine. If they did, it's as simple as doing a debit to depreciation expense for that amount and a credit to accumulated depreciation. And here are all the other journal entries for the other issues that were presented. Well, excuse me, this creates an adjusted trial balance. And the adjusted trial balance is really the final trial balance. This is the trial balance that we use to present financial statements. And so after the original trial balance, the regular entries, the unadjusted trial balance after that, and the adjustments, this trial balance is presented, and it is the final one. And after it, we're going to be taking the data from here and going straight to financial statements. And so this first one, we take all of the things, primarily revenue, expense, or revenue and expense items, and we create an income statement like this. A balance sheet is created like this one. And then there are closing entries. And I've mentioned before, the purpose of the closing entries is so we can zero out all of the temporary accounts, which are really revenue and expense and dividends, and get them ready for the next year. So here we close out all revenue in the first entry to retained earnings. We close out all expenses to retained earnings in the second entry. And we close out dividends to retained earnings in the third entry. And the next section here, problem 8, shows you how all of these would go into general ledger accounts. And finally, how the general ledger at this point creates a post-closing trial balance. Now, when I said that the final trial balance was the adjusted trial balance, somebody could make an argument for post-closing trial balance, but here's why I don't think that's the final one. In this one, we've already zeroed out all the revenue and all the expense and put it into retained earnings. And that's fine, we're ready for the next year, but it's not the one we use to present all the financial statements. Well, that's the homework for this time. It's the essence of chapter 3. Good luck, and we'll talk soon.